Okay, Daniel Rowe here from tradetheplan.com. I wanted to just kind of get this documented before I either get stopped out or it takes off and hits my target at some point today or tomorrow. Probably not today because I'm looking to trade back above these highs. So I'm making this guide on the methodology, covering as much detail without getting lost in the weeds and giving some examples. And I'm trying to do two major examples. So one being the largest trade that we would take, for instance, like the trade that I'm in now for the ES, this big swing trade. Everything that goes into a trade, using the operative time frame signals from the logic manager to identify the corrective, the ends, or let's say potential ends of corrective waves, and then all of the areas that come together for the market geometry and volume profile, and to some extent fib confluence zones, how all of that comes together on the different time frames, what are the basic rules for that, different charts that we use, and then the confirmation signals from the volume analyst and the divergence analyst. So anyway, I've got all that explained in here. I'm not going to walk through all that right now, but what I wanted to do was wait for a situation to where I'm in one trade that is about the biggest trade, this giant swing trade that I'm in the ES, but at the same time, one of the smaller trades that we would take, which would be the short that I'm in crude oil. And I have the raw volume indicator on a couple of these charts just to show the differences between the relative volume and the raw volume. But anyway, I wanted to kind of document this a little bit. I think crude oil is going to get stopped out. It's likely to get stopped out. It's already come pretty close to my stop. But let me at least cover a little bit about why I entered these couple of trades. So first of all, I did take a really stupid entry the other day in the ES. I just kind of jumped into it like an idiot. I was waiting for this area that the ES did make it down to, but in the overnight, it was like 2:30 in the morning, 2:25, 2:30. So by the time I had marked up the charts for the session, we had already put in this low, and I was looking for a potential reentry, and I just jumped into it. Really stupid. We actually had a smaller time frame signal short against it, and that's right where I was getting in. So a rather stupid trade, and then I got stopped out, of course, as it crashed. And then yesterday we had that terrible news. Well, it's whatever. It's already retraced well over half of that. So I think that's the low, the major low, today rather. And we're going to be going up from there. So today I missed the actual low, but then I entered here. And so far, so good. I'm actually long both the micro ES and the ES. So let me go over some of the reasons for the entry in the ES. It's actually quite pretty. So this is not quite the lowest low, but it does have, okay, I'm about to get stopped out on crude oil right here. I didn't have a whole lot of faith in that trade, and I'll show you why. It was a really strong V bottom. I was hoping to get one more swing low out of it, but I don't think, yeah, there it is. I don't think that's going to happen today. All right, so briefly, I'm thinking that this is the major low of the summer. This would be wave one up or whatever, it doesn't matter. And now we have what looks like a decent kind of flat correction or a WXY. And while this is not the lowest low, it is a major swing low. So I've connected from high to that low. That's what we've run into here, together with this upsloping channel, skipping that high, of course, because that would give us a channel that we've already broken out of. So this is the next channel, high before the low to this high. And that's what we have found support on, together with this downsloping channel. So all three of those are coming together right there, which is why I entered long where I did once we had the confirmation. So it's a trade setup long on the hourly chart. It's not quite showing up on the min 6 chart, the 138 minute. So it's, technically not the largest possible trade. Obviously, that would be from this chart, but in this case, this is the operative time frame for the long, the hourly chart, the min 5 chart. So it's still pretty big. It's still a multi-day swing trade that I would be holding for new highs probably sometime next week above 3,900, maybe above 4,000. If I'm right, then I'm expecting this to go up in a third wave. So it should take us above 43, 4,400 within the next 2 weeks. And then on the RTH chart, same kind of thing, high before the low to the highest. It's not the highest high between them, but it's the high before the low that I've traded. And we had a big, beautiful gap down into the low, making a lot of people think that we're going lower. And of course, that's when, as we're at major areas, big boys are sitting there with their bags open, collecting all the short selling, and it puts in a major low. Now we kind of have what looks like a V bottom. It's not perfect V, but we do have stronger momentum up and out from this low, at least on the tick chart, than we do coming down into it. We overthrew this one a little bit. That's fine because we overthrew this one down into the major up sloping areas. And now on the tick chart, same kind of thing, down sloping channel. This is maybe cheating a little bit. It's not really cheating because it is a valid area, but there is an area lower than that. So if we do go down lower and I get stopped out, I may attempt one more entry. Probably not. If it doesn't go from here, I think I'm just going to see what happens. If it actually breaks down from here, I would expect to go to new lows. And then on the faster tick chart, kind of an interesting one I've drawn from low to low, parallel from the high here, not the news high, but yesterday's, I guess that's still noon or afternoon, right at noon swing high. And that gives us the midline coming in on those lows. So the parallel of this down sloping channel connected to the high, the news high, after we break the bottom of that channel, the parallel is drawn from the low. It almost comes down there, but not quite. But then we are hitting all those other areas for the trade. And then this is where we start seeing all of the confirmation. Well, you start to see it on the tick charts, actually. A lot of momentum divergence as we made a couple of nice little retracements in here before the low. It's not really 3 drives into a low, but it is kind of starting to stair step into it, and you can see the loss of momentum. It's pretty obvious. You see how it comes down very strong, and then it kind of rounds out, which is what that double divergence and triple divergence signal is made to identify. So big selling climax right at the steepest section of this downtrend, and then the sharp retracement comes down at a less rapid rate, little retracement, and even less rapid rate or waning momentum into that double divergence swing. And then on the tick one, you have triple divergence, which is lovely, on volume divergence on pretty much every single chart. So every faster time frame has volume divergence, either double or triple momentum divergence. And then you have a lot of confirming volume signals as we come into the low, actually a little bit before the low. So if I would have been watching this in real time, I may have waited for it to turn up a little bit first. Either I would have entered like right in here as it just touched those major areas and we started to get the confirmation, or once it started to turn up a little bit out of that area. But I mean, I basically did that just a little bit later than what I would typically do. But now we are coming into some of the downsloping channels, very strong, huge volume actually coming in at this high. So that might knock it sideways, even put in a retracement before continuing higher, if it continues higher. Looks like it will. But yeah, we're finding resistance for sure, maybe on the minute chart. Well, we got the low before that high, and we're fighting to break through that now. Yeah, it's this trend line from high to high. highest high is actually right there, but since I've used this one to draw the median line set, which channels this downsloping channel here, or sorry, downsloping price action, that's one of the areas coming in for that low on triple divergence, volume divergence. And now it looks like we're attacking that area again, but that's the huge 2-bar pattern that will often confirm some of these smaller trade entries. But in this case, I'm already long and looking to break higher. So we'll see a lot of these against my trade as I'm trading the larger time frames and holding for a multi-day swing. I've already drawn these in, but let's see, the tightest one would be this one, quite perfect and beautiful. This is the RTH1. You can see that trend line gave us yesterday's afternoon high. Once we broke that channel yesterday morning, the parallel of that gives us today's low. So I should be in quite a bit closer to the low, but whatever. The risk to reward on this is huge as I'm looking to get above 3,900. Well, let's just see exactly what it is right there. It's honestly much, much higher than that. Over 10-1 is what I'm expecting. The minimum I would take would be, say, the top of that channel at least, which is about 4-1. Pretty awesome. And then for crude, the reason I got short there, I had drawn this one, which really should have drawn this one, and then I would just be entering short just now. But yeah, I was trying to be in two good trades at the same time. Didn't work out. That's the way it goes. That's trading. But yeah, it looks like we are getting some supply coming in now. Nah, I wouldn't be taking it. Kind of looks like an impulse of maybe an A wave up of a larger correction. And then I had drawn, I think, yeah, it was just this one, right? And then shorted right here. And then got stopped out just now, but that's fine, whatever. That's cost of doing business. I have to interject something here. It's not fine. That trade should have never been taken. I was only looking at from the 5-minute, 2-minute, 1-minute charts and the tick 2 and tick 1. So I didn't actually have the areas drawn in on the higher time frames because I've been focusing on the ES and not really looking at crude oil as much as I should have been because I've been updating this massive document on our methodology. And look at what I was trading into. And this should have been picture perfect had I been keeping track of crude like I usually do, which just goes to show you the importance of having the areas drawn in on the higher time frames. I would have never traded back into that after having rejected up and out of it. That's just ridiculous. And there's probably more too. Let's see. I don't know that I have a daily chart open for crude. Let's just open one. In fact, yeah. Oh wow, I can see it already. Not quite. Pretty close. I'm sure there are more though. Let's see. Oh yeah. Look at that one. There's your up-sloping lower median line. What else? Maybe this gap high. I'll come back and fix that. Those are always pretty important. Yep. So, yeah, the worst spot imaginable to be shorting into. So, no, not fine at all. That was a big mistake. Almost looks like an ending diagonal for a C wave. Oh wow. Look at that. Yeah, that's our low in crude. Maybe it comes down to this baseline, but That looks like our summer low in crude. Anyway, I had to interject this in here because it was just so glaringly obvious. So anyway, that's it. I'm going to stop it here and then, well, let's do this. So this is the MES micro ES, but you can switch it from the ES to the micro just for the entry and still get all of the signals from the ES charts. So this chart is just simply grabbing the bloodhound signals from this chart. And when they both line up, market geometry in the bottom, volume and momentum divergence confirmation with the operative time frame in the top panel. So the first signal there, right here, would have been where these two line up. And then the second one is where these two line up. So you had a steady signal from the market geometry as it's coming from all those larger time frames. So pretty big areas. All right, I'm going to stop it here and then I'll pick it up again once enough price action has transpired. Okay, so it's the following morning, 9:33, July 15th. And I've already taken one off from the MES, the micro ES. But I'm kind of debating whether I should take one off of the ES. It has run into some fairly significant resistance. This downsloping upper median line. Anyway, let's look a little bit closer. Yeah, see the RTH chart. RTH chart is still moving straight up. It looks like it's going to put in like a little swing high right in here. It's probably a high volume node from the volume profile. Let's just see. That's actually the point of control. I am going to take one off. All right. And finally tighten that stop up. And then I'll be holding the next one likely for a while, maybe a week. But yeah, it's a clean exit number one. Well, I should at least tighten that stop up. No, I'll be holding. Hmm. Definitely looks like a decent spot for a high. I don't think it's the high of the, well, it might be the high of the day. We'll see. I'm not going to close it though. 37.58, 37. Yeah, it's way down. Put it below those median lines. By the time we get there, it would be plenty of room. Of course, this is the reason I took one off there. The main reason between this and the volume profile, point of control of the prior downswing on the RTH chart. All right, so that's it. By the end of today, if we're up here above 3,900, then I may take it off just to not have to hold over the weekend. But I'm expecting this to really pick up speed to the upside. It's still potentially looking like an ABC currently, so it could come back down. Obviously, can do anything. I'm just expecting to see it, which is why I took the trade back to the top of that channel, at least, which is above 4,000. But ultimately, it should go well above 4,200 over the next 2 weeks, that prior swing high. But of course, I'm expecting 5,000 over the next 4 and 5 months. All right, that's it.